Oil prices are soaring yet again, further amplifying the global economic toll of Russia's attack on Ukraine. The international crude benchmark Brent is up 7% to top $110 a barrel. That's its highest level since July 2014. It comes amid fears that Moscow's sustained assault will force Western governments to impose sanctions on the Russian energy sector. Big companies are already preparing for that scenario, with the likes of Exxon and BP exiting their multi-billion-dollar Russian ventures. Russia is the world's second largest exporter of crude. The rally comes ahead of a meeting of the world's oil cartel, Opec. The group's expected to announce a decision on crude supply levels to meet growing global demand. Now for more, let's go to Naeem Aslam. He's the chief market analyst at AvaTrade in London. Welcome back to the program, Naeem. Now let's start with that OPEC meeting I mentioned. It's happening later today. They've been increasing supplies very slowly since late last year. What are your expectations now? Will the crisis in Ukraine change their approach?
Thanks for having me, as always. I don't think there's going to be any major shift. We have already heard from some OPEC delegates that they think their policy in terms of a supply, it remains unchanged, given what's going on between Russia and Ukraine. So the anticipation among investors and traders isn't really any mammoth increase in supply. I think we are only going to see a small or a minuscule amount of a supply coming, because remember, OPEC has made one element very clear, that they are comfortable where the prices are currently.
Right. So speaking of supply, we saw the International Energy Agency and its members announcing the release of about 60 million barrels from their strategic reserves, but that did next to nothing to calm markets. Why is that?
I think it goes back to your earlier comment when you were summarizing the market moves, because the main concern is the Russian supply. And if there are sanctions on Russian supply, that is going to have a huge detrimental impact. Now, if we look at from trading's perspective, we already see traders avoiding Russian oil currently. Hence, we see the spread between crude and Brent becoming very, very tight, because traders do not want to have a Russian crude. They are already anticipating some sort of sanctions or some sort of a more tightening of those sanctions coming.
All right. Naeem Aslam, chief market analyst at AvaTrade in London. Thank you for joining us.